United States Federal Reserve is considering the creation of a digital dollar.
In order to introduce CBDCs, you need digital IDs.
A CBDC is a digital currency that they think is going to replace all physical cash.
There's a type of money being built right now that most people have never heard of. It's something new, issued directly by central banks, programmable by design, and capable of doing things that no form of money in human history has ever been able to do. It's called a central bank digital currency, or CBDC, and over 130 countries are actively developing one. The question worth asking isn't whether this technology is coming, it's what happens when money itself can be programmed to follow rules you didn't agree to. To understand what makes a CBDC different, you first need to understand what money currently is. When you check your bank balance online, you're not looking at money. You're looking at a promise. Your bank owes you that amount, and when you want to spend it, the bank moves numbers between accounts on your behalf. If the bank fails, that promise might not be honored. That's why deposit insurance exists. The money in your account is a liability of a private institution, not a direct claim on anything issued by the government. Cash is different. A dollar bill is a direct liability of the Federal Reserve. When you hold physical cash, you hold something the central bank itself stands behind. A CBDC would work like cash in that sense. It would be issued directly by the central bank, not by a commercial bank. But unlike cash, it would be entirely digital. And unlike cash, it could be programmed. This is where things get interesting. Programmable money means the currency itself can carry instructions. Not instructions from you about where to send it, but instructions embedded in the money about how it can be used. Central banks have published research papers exploring what this makes possible. Money that expires if you don't spend it fast enough. Money that only works at approved merchants or that caps how much you can buy of certain goods while flagging your transactions in real time. China has already tested some of these features. In a 2020 pilot program in Shenzhen, the government distributed digital yuan with built-in expiration dates. If recipients didn't spend the money within a set window, it simply vanished from their wallets. The goal was to stimulate consumer spending, and it worked. 90% of the vouchers were spent before they expired. That's a policy lever no government has ever had before. The ability to force people to spend by making their savings disappear if they don't. Now imagine that same capability applied not as a stimulus measure, but as a compliance mechanism. A world where your wages arrive with conditions attached, or where your savings decay unless spent on approved purchases. Central bank researchers have described these features as benefits, not warnings. The European Central Bank is building a digital euro right now. Legislation is expected to pass in 2026 with a potential launch around 2029. European officials have been clear about why they want it. American companies dominate digital payments in Europe, and American foreign policy can cut anyone off from the global financial system at will. Christine Lagarde, who runs the European Central Bank, has said publicly that Europe is not effectively sovereign in our own garden when it comes to payments. The digital euro is her answer. A payment system that Brussels controls instead of Washington. The official messaging emphasizes privacy and convenience, things like offline payments, encrypted transactions, no ability for the central bank to identify users. These safeguards are written into the current proposals. In 10 years, when a future crisis hits and a future government decides that emergency measures require tighter controls on spending, the infrastructure will already be in place. China is further along. The digital yuan has been integrated into the banking system with over 260 million users across 29 cities. Every transaction that passes through it creates a record the state can access. Combined with China's existing surveillance infrastructure and social credit system, the digital yuan becomes another data point in a comprehensive profile of each citizen's behavior. Western commentators often dismiss this as something that could only happen in an authoritarian system. But the underlying technology doesn't care about political systems. It works the same way everywhere. The difference is only in how governments choose to use it. And governments everywhere are choosing to build it. Nigeria launched a CBDC in 2021. India is also piloting one, and the list keeps growing. Brazil, Japan, Russia, South Korea. The Bank for International Settlements, which functions as the central bank for central banks, has written extensively about how CBDCs could enable what they call direct control over economic behavior. That phrase, direct control, appears in their research papers as a selling point. Now you might be asking, what makes CBDCs different from the digital payments we already use? When you pay with a credit card or Venmo or Apple Pay, you're using a private company's infrastructure. That company has terms of service, which means it can refuse to process certain transactions or close your account entirely. We've seen this happen to individuals, to businesses, to entire industries that payment processors decided they didn't want to serve. But those are private companies making private decisions. There are alternatives. If Visa won't process your transaction, maybe MasterCard will. If PayPal closes your account, you can open one at a different bank. If all else fails, you can use cash. A CBDC changes that equation. When the currency itself is programmable, the restrictions aren't imposed by a private company you can route around. They're built into the money. There's no alternative system to switch to, and no cash equivalent, because the entire point of most CBDC implementations is to eventually phase out physical currency. Mexico's president announced earlier this year that cash payments would be eliminated for gasoline and toll roads by the end of 2026. In a country where 80% of transactions still happen with physical bills and coins, millions of people are being pushed into the digital system whether they want to go or not. The justifications are always the same: modernization, efficiency, fighting crime, and those aren't lies. Digital payments really are faster and harder to skim, but there's a vast difference between offering people a convenient option and removing their ability to choose. The United States is actually moving in the opposite direction right now. In early March 2026, the Senate voted 84-6 to ban the Federal Reserve from issuing a CBDC until at least 2031. The White House called it a threat to personal privacy and liberty. The bill explicitly prohibits not just direct issuance of a digital dollar, but any indirect scheme that would function like one through intermediary banks. That's a significant political statement. The world's reserve currency nation just formally rejected the surveillance architecture that most other countries are racing to build. But the ban expires in 2031. Administrations change, and the technology keeps advancing, whether any particular country adopts it or not. Every payment system generates data. Credit cards track where you shop. Bank accounts record your deposits and withdrawals. But these records are fragmented across different institutions, governed by different rules, accessible only through specific legal processes. A CBDC centralizes that data by design. One system, one ledger, one set of rules about who can access what. The same entity that decides how much money exists would also see exactly where every unit of it goes. Agustín Carstens, head of the Bank for International Settlements, said it plainly in 2020. A key difference with the CBDC is that central banks will have absolute control on the rules and regulations that will determine the use of that currency, and we will have the technology to enforce that. Cash works whether the government likes you or not. A CBDC only works if it lets you. If this changed how you think about money, subscribe. More on this coming soon. Drop a comment with your thoughts.